All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of Gar Capital. It is Thursday, December 7th, 2023. Don't know exactly in terms of how long it's been. I'd have to do the math, but December 7th was the attack on Pearl Harbor. If anyone is a history fan or World War II history like I am, such a history buff, I always think of December 7th, 1941. We do the math, so we're about 82 years now since the attack in Pearl Harbor in Hawaii that put the United States into World War II. Fascinating story. If anyone is interested in that, man, there's so many great books on it. So check that out. If you're into history, sorry, I think of December 7th. I always think of Pearl Harbor. Good morning, everybody. Dow futures up about 4 points. Nasdaq up about 96 points. Got a couple of things that came in today. AMD, some AMD headlines. So they're up this morning, right around 2.78%. Here's the headline. Meta and Microsoft say they will buy AMD's new AI chip as an alternative to NVIDIA's. Now, yesterday's price action on AMD, we had a pop in the morning ahead of the investor meeting with the CEO, Lisa Su, and then we dropped after that. So it's been a very choppy tape, and we're going to go over that here in a second. Good morning, Ryan. Let's take a look at AMD's price action. This was just yesterday. Popped to 122. We talked about 122 being a very key level. Again, that's the level we kind of want to break. That's the last time we traded AMD. We were in the money that week. The 125s bought time and everything, and we're still red. This is the environment right now. The market is telling you there's no direction. Right now, all you're seeing is chop. Period. End of discussion. Even with AMD, with that really great news for that company, I mean, really nothing for the past 3 weeks. Been stuck between 122 and 116. Not much to do there. Technically speaking, did we tag some support? Yeah, maybe a triple bottom on the 1 hour. I had that alert at 115.88. It never broke through. So again, AMD, yes, it is up today, but there was nothing really to do there. Unless you're really playing some analyst news or updates, more than likely, if you had AMD yesterday or you traded it up or down, you probably got out, if anything. Also had some news on Google, Alphabet. Alphabet strength tied to positive news on Gemini AI model. That stock is up 3.3% this morning. Let's go to the daily just to take a look at it. 136.17. Did we break anything that's meaningful? Yes, we did. We are now back above the 20-day. Again, the assumption of this is where we actually open. So we're back above the 20. We're below the 50. We're below the 100. And now 142.46. That's still a level I'm looking for. That's the early October highs on Google. That's what we are looking for a break. So yes, the stock is up, but there's not much we could do. QQQ. I know I haven't gone around the horn here. Let's take a look, Ryan, together. Take a look at Qs, right? Really, guys, since November 13th, nothing. Kind of just holding on to that purple line here of support. We were below the 20-day yesterday. We're below the 20 all morning, and now we're back above it. And we actually had a nasty daily candle on Nasdaq futures, which was an inverse hammer candle. And that's usually a sign. Remember, we talked about this, the inverse hammer candle. So all of that gain that we talked about yesterday morning, that was reversed midday. Let's go back to Qs one more time again, because I am holding puts. Every time I'm on the morning note, it feels like, damn, man, I'm holding these puts still. But I mean, we still have more downside. I still believe that we're still going to get this gap fill. Yes, we had unemployment claims today, better than expected, but we do have NFP tomorrow. And I do remember that Google trade. I will never forget it. So I'm sticking with it. But really, since November 13th, that's what you've been having on Qs. Not exactly giving a lot of confidence out there, but that's your 4 hour chart, guys. It's just chop. This is the reason why we only have one trade open for the end of the week. That's the only reason. There's nothing to do. So that's just one of those things where you're just waiting patiently like a sniper, and you don't want to waste any ammo. You're just watching and observing and see what else we get. But until then, not much to do, at least on the index side. We did catch RTY, Russell, before it reversed, but at least that. But NQ tried for a scalp. I told Nick I like it to the short side again because I do have Q puts. It's now at 915. I shorted. I still have that at 800. So again, I still think we get a little more of a slide, but it's just chop here. So not much going on. GME thoughts. Oh yeah, you could short it back down. Yeah, you could. I just don't want to double down or triple down into it or anything like that. Let's take a look here. GME, again, sliding back down even after their earnings yesterday. Let's take a look at the daily. You still got that gap to fill at 1357. I mean, if you break the 50, sure, but that's not a lot of room to play this. So the best bet here is just to wait this out if you want to trade it. But I think there's better opportunities and other names out there, personally. Let's go and finish up around the horn. Qs want 380. Thank you. Yes, I agree. I think QQQ is going to get even below that. But right now, the market is saying I'm an idiot, which, again, that's happened many times. We'll see what happens. Again, yesterday we had this boost. Remember that? And then we rejected 390, came back down, and just frustration station for everybody. So again, I want to see exactly how the day goes. I'm not trying to make any kind of big moves. Even Shopify, which I got in, reversed on me based on some analyst call, Wedbush. I mean, three price upgrades on Shopify. All good, right? Nope, Wedbush. One downgrade is all it took. And that's just bad luck, unfortunately. The good news, I do have time on them. So again, I still have the upside there. I mean, really worst case scenario is that we break below the 20-day, and that's at 69.10. So I'm being patient. Again, guys, look at this on the daily. That is a breakout any day of the week. We're just chopping on that top end of the range. That's why you buy time. Sorry, it's a lot. Ryan's asking about Enphase. Enphase solar, that's right, Enphase Energy, 101.77. That's your 100-day, 50-day, excuse me. And you also have a gap to fill here at 115. So maybe if you break 110, you could target 115, Ryan. If you're looking at calls for Enphase, I don't know if there's a lot of volume there, but in terms of the stock as well, I'd prefer it before you even touch it long to get at least above 152. Get me above the 200-day. That's always the key. You want to get above there. 700% SPX puts at the close. You're a savage, Ryan. You're a savage. To me, that sounds like like a 10-team parlay in NFL, and I always give props to that because that's skill, man. I don't do that. That's definitely I can't do those kind of scalps. It's very difficult as it is. At least I couldn't do it talking to the members and answering questions and updating rate. It's just way too difficult. I only have two hands, so I can only type so quick. I want to short it. Yes, I agree. But let's not double down. Let's wait. Let's be patient. Let's be patient, Ryan. I agree with you, my friend. I agree with you 100%. I still think we come back down. But again, all we are doing is ping-ponging. That's all we're doing. I guess 45.50 as support. Now, again, the uber bull in me is saying yes, go higher. But again, when you're buying puts, you turn into a bear at least for a day or a week or 2 weeks. It's the worst. End of the day, SPX pays the most. Yes, that's usually when you get the closing of positions from day traders. So yes, that's definitely a strategy. Definitely, it's very high pressure. Some people thrive on it. I mean, on that end, with just a couple minutes of the day, I don't think I could. But props to you, Ryan, on that. S&P 500 futures 45.69 up 0.30%. Nasdaq futures up 100, back above the 20. The Russell, we talked about rotation. Of course, rotation only lasts in this market half a day and every other day. We got that Monday morning and we got it on Wednesday morning. So RTY 1853, we got out right here at 1885. Thank God. We moved the stop to break even. And then I said, we were looking at this candle coming down. It was me and Nick on our virtual call. We were looking at some charts together, pulled back. But luckily we gained some profit there in RTY. And again, RTY hasn't broken anything really significant in terms of downside. You still have the 50-day below at 1830. If we can hold 1820, that'd probably be a good place to reload for more upside. That's what I'd be looking for, personally. So again, you kind of have that inverse head and shoulders set up. We got that boost. Now again, do we retest that shoulder line maybe at 1816? That remains to be seen. I would hope so in December. If we expect a Santa rally, that the rally broadens out and we get more of a Russell-centric boost. That's what I would be looking for, yes. Let's see, keeping going here. 10-year Treasury yields bouncing a little bit, 4.144. Crude is back above 70. We talked about crude as well. 72, kind of the level I'm looking for, maybe to short again. So let's see what crude does, because keep in mind, crude has gone down even with the dollar going down. Now, again, the dollar's not going to go to 100 tomorrow. I'm sure we'll get a little bit of bounces here and there. But again, if we get a little dollar strength, why not short crude? That'd be a good pair trade for the future. So, and again, seasonally speaking, in terms of crude demand in the winter, Even natural gas was down as much as 5% yesterday. So we're getting commodities really pulling back here. And if we get dollar bounce, maybe next week or so, something like that. Again, crude oil would be a nice pair trade, weakness versus strength. Watch that carefully. Gasoline futures bouncing 0.41%, $2.03. 2052 on gold, up 0.21%. Gold is a good trade if you are betting on rate cuts. We are now at a 55% chance that we will have our first rate cut in March. So why does gold matter? Why do commodities matter if the currency is being devalued? That's all it is when you're getting rate cuts. It's devaluing the dollar by, of course, buying bonds. The good old fractional reserve system monetary policy. It's a whole thing. If anyone is really interested in some nerdy talk on how money actually works and what the Fed really does, it's called modern money mechanics. It's completely public to everybody. When I've read it, I couldn't believe that it was public because it's literally showing you the cookbook of how money is created. The fractional reserve system, modern money mechanics. Enjoy it. I mean, if you're a monetary policy economics nerd, you will be so stunned. It's so funny reading that because you're like, there's no way that this is real. Oh yeah, it is. And then you'll change your perception on money really quickly when you look at exactly how modern money mechanics actually works and the fractional reserve theory. It's basically telling you in that book that debt will never be wiped out. Never. There will never be a day that debt will be at zero. Globally, the United States, it's never going to happen. It can't. The system has to have debt in order to function. But again, I won't ruin it for you guys. You guys enjoy that book. Copper futures up 1.42%, $3.78. Let's take a look. The book, it's called Modern Money Mechanics. So think of the three M's. It was actually written by the Federal Reserve. It's kind of like a pamphlet. And they talk about the fractional reserve system and how bank credits transfer to banks, which create more money. So money is debt, and debt is money. Remember that. So there will always be debt. You cannot use the currency to pay off every debt. It is mathematically impossible because you would have zero money in circulation. Think of it that way. That is the gist of the modern money mechanics. Read that book. It's not that long. It's more like a pamphlet, like I said, and you will be blown away at really how money works. It's insane how it is, and the perception will change really fast. You will not see money in the sense of scarcity. You will see money in terms of abundance and how, because if I told you, for example, Robert, that's on here, if I told you, Robert, that oxygen, the air you breathe, I'm going to charge you for it. The government's going to charge you for it. I know. Don't give me the tax jokes. I get it. But the air we breathe, if you could charge for it, how much would it cost, right? In a sense, you're kind of thinking to yourself, wait, why would I think of air as scarce? It's literally all around me. I can breathe anytime, and you're going to charge me for it? I mean, we're pretty close to it. I mean, we charge for bottled water for like $2 or $3, right? At the gas station, the most abundant resource on planet Earth, and we charge $3 a bottle for it. That's capitalism, baby. But with that being said, think of how air works, how the oxygen we breathe, how abundant it is in the air we breathe. We don't count how many breaths we take. We don't say we hit a quota. We're definitely not charged for it. You just take a breath in and breath out, right? That is literally how much money is available in the system. Like, we can't really wrap around the number trillion. If there's maybe one day you guys are on YouTube and you're kind of bored, look at numbers visualized. Really look at how much 1 trillion is versus a billion. Like, visualized. I think they had like some kind of infographics showing if you had $1 billion in $100 bills, it would be like as big as a bunch of crates together. $1 million fits in a duffel bag, and then you think of a trillion, and it's ridiculous how those numbers work. And really we don't wrap our minds around it. But I digress. Again, Modern Money Mechanics, great book. Read it. All right, so enough about books and the books I like. Let's go to S&P again. Actually, I want to go ahead and take a look at the VIX. And the VIX, as we are conditioned to think of VIX as the fear gauge, right? Volatility index. The VIX is not saying that people are not afraid. It's not about fear. Again, it really is the movement. Volatility means movement up and down. So right now, what is the VIX telling us? That everyone's greedy? Maybe. I mean, sure, I guess you could say that. Like, we're going to just go straight up every single day. What you're seeing in the VIX here is just complacency. That's really it. And really, that's actually the normal operating procedure for the VIX. Really, before 2000 and 2000, before the 2000s, the volatility index wasn't really a big deal. It really only came about as we had a little more deregulation and stock markets, and then the advent of the internet. Again, more players in the arena, more traders. Again, prices are going to move up and down rather sharply because of just volume. That's just kind of the law of numbers. But right now, what we're seeing is just straight complacency, where again, this is where the chop comes in. Again, you just had an amazing November where bonds and stock mixture, the 60-40 portfolio, had its best return in 30 years. So I mean, you're not going to get it right after the fact. It's going to take some time. If we get some continuation, I still say we do, and I still think that we pull back to fill one gap on QQQ, just one. But again, the market is just showing you it's a snooze fest. No one's really doing much. Corporate buybacks are kind of drying up now. Earnings are pretty much done. We kind of already expect what the Fed's going to do. No one expects a raise in December for the Fed. We still expect CPI to continue to slide. Retail sales have been okay. There hasn't been much deviation, is the point. Yes, we have a lot of things priced in. Middle East conflict, that's not pretty much priced in. Take a look at crude oil. Not a lot of fear there. So what you have here, the VIX gauge, or I will think of it complacency gauge, because you're getting a whole bunch of nothing. And that's where we are. That's why we are where we are. 10-year treasury yields, TNX, how low can we go? Boy, can we get to 4%? Absolutely. We've been saying right around 3.941 or so. If you really wanted to be kind of precise, be 40.77. If we test the 200-day weekly, which is about 4.029, you break below that, then you could start talking about 3.1 to 3.43%. So we talked about how this would be a help for the banks, refinancing boom. If there's anyone here on this channel that is looking to buy a home, to possibly refinance their home, this is a chart you need to be watching daily. It doesn't correlate one for one with mortgage-backed securities on how rates go. So again, rates have fallen, but mortgage rates have not fallen as quickly as a 10-year. So it's not a one-for-one correlation. But when you start breaking 3.941, you're going to start getting into the low sixes, the high fives, possibly for a 30-year fixed rate mortgage. This is where those individuals that bought either last year or this year, earlier this year, let's say, that they could possibly refinance their home. Now, again, I'm not a real estate expert. I assume that you obviously need some equity in the home. Again, I don't know how much the home is priced, but again, that would be a pretty decent time, team, to start looking for your first home. Again, I'm not a real estate agent, so again, use your realtor. I don't know. I don't have anybody to refer you to, unfortunately. But yeah, that would be a nice time to go house shopping. And we know what housing does. It boosts appliance sales. It boosts Home Depot sales. People need to furnish their home. That's furniture, all discretionary. There is still a lot of cash on the sidelines. Rates have gone up. This is right here, this kind of chart here, this pullback. This is showing you financial conditions. If this number goes down further, the looser financial conditions in terms of ease of capital, ease of getting capital. And again, you cannot have a recession unless there's no money available. That's usually what causes a grind halt in an economy, is just the lack of capital. You can't buy anything because you're not working, or you can't expand your business because you can't get a loan from the bank. Right now, the market is showing you, at least on a 10-year basis, that we are getting looser financial conditions. Loosen them enough, we're going to get some demand in terms of mortgages and all that stuff, which will increase home prices and, of course, increase inflation. The good old circle of life. All right, guys, we'll leave it there. Have a great rest of your morning. Thank you so much for joining me this morning. I will see you guys tomorrow for the morning note. Remember, tomorrow we do have the non-farm payroll report. That's going to be important. Again, anything below 100,000 would be a really good sign. I think we would soar if that's the case. If we have a high jobs number, maybe in the 200,000s, 150,000, that's going to be a negative for the stock market. I would say that we would start falling again. I would not be surprised if we reject here today and come back in and just ping pong again. That's what it seems like. It feels like today. So a frustrating day. Don't make any kind of emotional decisions in terms of opening new positions or trying to double down or trying to add to a loser. Don't do it. Right now, you just sit on your hands and just watch what you're watching. And anything else will update you. Have a great